GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
Both the senior indexes in Canada and the U.S. have now reached record highs. Is this something we should be really happy about, or is this a warning signal?
Oh, uptrend is showing positive times, and we should be enjoying it. The thing is, your latter part of it is, how long is this going to last? And what we should look at is that in June, and we've been talking about it more or less since, there seemed to be a very positive wave came through into the financial markets. And also there was positive in business kind of things. So the U.S. third quarter, which ended at the end of September, was a good one, better than what was expected. And that was before the election. Now, two other things that were turned out to be positives was one in June, the referendum in England called Brexit, and that hit the markets because it was something new, and then the markets took off because the new was not the threat that everybody initially thought. And then similar happened, and oftentimes you can have sort of in late October and into November is the period of time when you can have, if there's any financial problems, they likely be cleared out by that time, which is what we were looking for. And also we were looking for the American spring, whereby a political reform would get underway, and then that was confirmed with the election, and then that's when everybody got aboard. And so you've had a truly outstanding rally out of a possible seasonal low. And then you've seen that the new administration, and what I've called it, is that it was a popular uprising, another one that really forced the political change. And it turns out that Trump is not so much leading it, but he is providing the executive for a very broad-based popular uprising that is not going to go away. And this, of course, is coming out with, and as he moves, lower tax rates and lower regulations. I saw one the other day. It was like 9 billion hours a year to look after regulations, just filing forms and stuff like that. In the U.S., that was for 2015. And so the regulatory burden is having the staff to do the paperwork, and it is also the intrusion, the limits on freedom and innovation that business traditionally does. So it's a double-handled negative there, and so the removing of it is a very positive thing. So it looks like the Obama administration, which was probably the most intrusive administration in U.S. history, at least since Roosevelt. And you're now into what is probably the most pro-business administration, which is, in a historical sense, very exciting and all for it. So this is what's driving the market. So there was a discussion of advancing the tax reform, and bang, you get a rally. So now going along with this is that, of course, rallies are stock market dynamics, and those dynamics can be measured on our technical side. So on the thrust into December, we got upside exhaustions, and which relates to momentum, and we also got the sequential sells, which relates to patterns. So normally, after some weeks, you'd expect the correction to start, which it did, but what you have is the senior indexes making new highs against already strong dynamics. But underneath it, you have, like, the transports underperforming. And when they began to underperform in 2015, that was a warning on that high from which there was a decline such that you wouldn't want to be in the market. So, and then you also have the bank stocks getting awfully excited. As a matter of fact, very excited. In Canada, the Royal Bank is up to a RSI of 77. And the reason why I'm mentioning that is because the banks, of course, were a disaster going into last January, February, when crude oil fell to $26. And then, of course, it's all recovered, what we called the rotation, whereby you would buy seasonally, oil and mining stocks on weakness into January. And then it kept going, and so you're now into an extraordinary market for these things, and they say they're generating some pretty excesses, because you had the revival in the coal side. There were some U.S. coal stocks have done outstandingly well, and you've had also a strong rally in metallurgical coal, and you've had a rally in thermal coal, and you've had a potential revival of the industry, whereas the Democrats were trying to destroy the coal industry. And so a lot of positive stuff out there, and it's reaching excesses. And indeed, the base metal stocks have drifted down a little where they'd been hot. Coal stocks have drifted down a little where they've been hot. And go back to the banks, one of the other supporting factors beyond the recovery in the crude oil side was the yield curve, where we'd looked for the curve to be steepening, and it turned to steepening in June and ran to steepening until December, and that's a plus for the bank stocks. But it's not been steepening since, and it's attempting to reverse to flattening, and that would not be good for bank stocks. So, but we're not saying this excess is culminating now, but sometime in a few weeks it could.
Canada also added 48,000 jobs unexpectedly, and they're good jobs. They're not part-time burger flippers.
Well, that's that's a healthy type of positive, isn't it?
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, we have a listener question. He wanted to know about U.S. dollar bank stocks and junk bonds. Henry
in the States had asked the question. And on the dollar index in the U.S., we were it got overbought about 4 weeks ago at the 103.85 level. And we were looking for a correction a fairly significant one. This would be just from, the kind of the momentum as it went up, and then also the ChartWorks has a model, a long-term model, and it was looking for a fairly good correction in here. But the dollar index now has come down, and it's the one of the guides we use there is the 20-week exponential moving average, and it has been basing, and that was the base like it did in 2014 when you then had that eruptive rally, just really terrific rally. So it's basing, and it's looking good. So I think the dollar index is getting ready for a rally. And on this long-term model we've had, it could be an outstanding rally. Looking forward to it, actually. The other one is junk bonds. Let's see, a couple of weeks ago, we got an upside exhaustion on JNK, which is the symbol for the junk bond ETF. And so that's been going for a long time, because it was the junk bonds related to the oil patch that were really trashed, and it pulled the whole market down into last January, February. And it has been a fabulous rally for low-grade securities, absolutely incredible, until just a week or so ago when the upside exhaustion came in. So it's now precarious, and we would be avoiding low-grade stuff. And then the bank stocks, we're looking at these, and in the U.S., like Goldman Sachs and stuff like that, in December they gave pretty strong readings and have corrected some, but more lately they're running again. And then Canadian bank stocks are at new highs, and I just looked at the biggest Canadian bank, Royal Bank, and its RSI is up to a 77 on that one, which is getting high, but it's strong, and it can go for a few weeks more in here. So yeah, banks, financials are strong, but all of these hot things really are generating technical readings that are usually found at or near important highs. So we should keep that in mind. And on the bank stocks, we should keep in mind that the yield curve is beginning to change. And then also with the credit spreads on junk bonds having reached a maximum momentum, the change in credit spreads would be adverse to the banks as well. So looks like a culminating thing here somewhere in the next few weeks. All of this hot stuff could, particularly on the financial side, could culminate. But the market will tell us.
Does that mean we can expect a downturn, or is it going to kind of churn sideways for a while?
Well, no, we could do, perhaps, Jim, call it like we did in 2015, a big rounding top, whereby not every sector peaks at the same time, and not every stock exchange peaks in the same time, but it's sort of a big cyclical peak, and this can stretch out over a while. And the positives that we've been looking for when you reach these excesses, and the positives that would help keep rounding the top out would be, of course, we were looking for crude oil to be firm perhaps into March, and the base metals to be firm perhaps into March. And they're kind of hanging in there. We're not getting new highs for base metals. And as of the last couple of days, you had a correction in crude ended, and you've had a couple of good days in here. So these positive things can continue into March. And then perhaps the excesses that have been on would have to be corrected, seriously corrected. But you've got things here. Consumer numbers have jumped. You had CEOs, sort of an index there of their consumer comfort index, surged to the highest since 2015. And then you've got another one, the State of the Economy Survey, the strongest since July 2007. So, these are extremes, and a headline I'm just looking at here now from the Financial Times on February the 8th, investors pile into risky bonds, And then the Wall Street Journal on the same date puts one out that there was a record $1 trillion in junk debt is to mature in the next 5 years. So this is stuff that was written as junk debt. And if this bond market rolls over, say later in the year, you're in a condition whereby the market may be creating new junk debt as companies get marked down on their credit ratings. So, but when you look at a 12 trillion of debt maturing, that's junk debt in the next 5 years, that's a big number. And you have to have a very positive market in order to absorb all of that. So it'd be an interesting one to watch. Gold and silver in the precious metal sector, very good rally up to a target that the ChartWorks has had with the momentum. So there'd be a correction in the precious metals for a little while.
What's behind this big tear in copper? 277. A few months ago, it was 206.
Yeah, seasonal. You can often have a seasonal low for copper in November, and then out to, you can often have a seasonal high in March. That's what we were looking for. Base metals to remain firm into March, it's had a nice move, but it hasn't done anything in the last couple of weeks. But it can remain positive, into March, which is actually not so far away now.
Bob, thanks a lot for chatting with us.
Jim, it was good to be with you, and look forward to chatting again next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for Bob, you can send them to info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.